Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 4th, 2026. Let's dive in.
Market overview. Well, Sarah, Celebration Street is probably an understatement for what we saw on Dalal Street yesterday. The Indian markets pulled off a massive relief rally following the historic U.S.-India trade deal. Both the Nifty 50 and the Sensex surged about 2.5%. We're talking about the Sensex jumping over 2,000 points in a single session, adding a staggering 12.5 lakh crore rupees to investor wealth. The catalyst? President Trump confirmed that the U.S. will slash reciprocal tariffs on Indian goods to 18%, down from 25%. Looking at the F&O cues for today, the sentiment has clearly shifted to a buy-on-dip strategy. While the GIFT Nifty is currently signaling a relatively flat start, trading around the 25,819 level, analysts are pointing to strong Fibonacci support near 25,500. We saw massive short covering yesterday, and the rupee had its biggest leap in 7 years. However, it wasn't all smooth sailing for everyone. Retail investors were understandably frustrated as glitches at Zerodha reportedly prevented many from participating in the opening gap up. As we head into today's session, keep an eye on the 26,000 mark for the Nifty as the next psychological resistance.
International markets, it's a fascinating contrast globally, Joe. While India is cheering, Wall Street had a rougher night. The Nasdaq and S&P 500 were weighed down by a significant sell-off in technology and software stocks. This was largely triggered by fears over a new AI automation tool from Anthropic that's sending shockwaves through the software sector. Over in Asia this morning, the picture is mixed. Japan's Nikkei 225 actually jumped over 3% to reach a record high, buoyed by the US-India deal news, though volatility is spiking ahead of their upcoming elections. Meanwhile, in Australia, traders are aggressively boosting bets on a rate hike, potentially the first in the world for 2026, as they struggle with resurgent inflation. In the commodities space, we have a historic milestone. Gold has broken past the $5,000 per ounce mark, extending its gains as a safe haven play. In currencies, the rupee's rally against the dollar is the big story, though we expect the RBI to step in soon to build up forex reserves. And keep an eye on Vietnam. They're easing rules for foreign investors as they gun for an emerging market upgrade from FTSE Russell.
Business story 1 and 2. Back home, the trade deal has completely rewritten the Nifty playbook. First, let's talk about the handshake with the Dawn. Reliance Industries and Adani Group stocks were the stars of the show. Adani firms emerged as top gainers not just on tariff news, but because the deal reportedly opens up access to Venezuelan heavy crude. Reliance stands to benefit immensely from these cheaper, heavier crude imports for its refining complex. Secondly, the export-oriented sectors are on fire. We saw chemical stocks like RD Industries and UPL surge up to 19% because the tariff drop to 18% immediately boosts their margins and competitiveness against Chinese exports. Textiles and leather are also in the spotlight. Wellspun Living and Trident saw heavy buying. However, it's not all sunshine. The Indian IT sector, the usual bellwether, is actually under pressure. That same Anthropic AI tool Sarah mentioned is sparking fears that traditional software services could be disrupted, which might stall the recovery we were expecting in stocks like TCS and Infosys.
Business story 3 and 4. Looking at the international corporate landscape, the AI anxiety Joe mentioned is real. We saw a $285 billion rout across global software and financial services yesterday. Interestingly, NVIDIA's CEO Jensen Huang tried to calm the waters, stating there's no drama between NVIDIA and OpenAI, insisting that their roadmap is on track. Investors are currently trying to figure out if this software sell-off is a fundamental collapse or just a shift in how growth is valued. In other sectors, Chipotle shares took a hit, sinking after the chain reported falling foot traffic and weak guidance. It's a sign that even the most resilient consumer brands are feeling the pinch. We're also watching Eli Lilly, there's a lot of nervous energy ahead of their earnings, contrasted with a strange sense of optimism in the housing sector. Lastly, keep an eye on the private credit market. Stocks with high exposure to private credit are plummeting on fears that the software companies they've lent to might be the first casualties of this new wave of AI automation.
Economics and geopolitics. On the policy front, the geopolitical map is shifting. This U.S.-India trade deal is a massive strategic move by the Trump administration, effectively signaling that the U.S. is looking for a primary democratic partner in Asia to counterbalance both China and a more integrated European trade bloc. For the RBI, this is a problem of plenty. The rupee's sudden strength is great for inflation, but bad for export competitiveness. Analysts expect Governor Das might pivot to aggressive dollar buying to rebuild India's forex reserves, which would effectively put a floor under the U.S. dollar to Indian rupee pair. Meanwhile, China's top officials are vowing to boost domestic consumption to overhaul their economy, recognizing that the global trade landscape is at a pivotal juncture. It's a high-stakes game of musical chairs between the Fed's restrictive stance and the emerging trade alliances.
Key takeaways. To wrap things up for our investors today, first, the India-US trade deal is the primary driver. Look for continued momentum in chemicals, textiles, and Adani Group stocks. Second, the rupee's strength is a double-edged sword. Watch the RBI's intervention levels. Third, the IT sector is facing a new headwind in the form of AI-driven software disruption. Tread carefully there. And finally, with gold over $5,000, the global appetite for risk is tempered by a need for safety, despite the local rally. It's a market of buy the deal, but watch the disruption.
That wraps up today's update. I hope you gained useful insights for your trading day.
Add your thoughts in the comments and follow for more such updates. This is Sarah.
And Joe, signing off.